Welcome guys to another video. I'm Boss FX. You should have known by now. Yeah man. So in this video guys, as you see on my screen, I want to go over market structure with you guys. Very important aspect of trading when it comes on to technical analysis, right? In order to understand how the market move and know pretty much to have a good understanding of the market, you have to understand the market structure and how the market move. There are three main ways in which the market move. As you can see, we have an uptrend, a consolidating or sideways market, and downtrend. Three main ways, right? Uptrend, consolidating market, or a downtrend. So what I'm going to do in this video, I'm going to go over each structure, what define each structure, and pretty much by the end of the video, you should be good when it comes on to understanding the market structure. So this video would be very basic concept. So let's go. So first, I'm going to just draw a few illustration representing each trend. So the first one I'm going to start with is the uptrend. All right. So let's take a look at the uptrend. So the textbook definition of an uptrend usually looks something like this. So with this movement, we can clearly see that the direction of the image is pretty much going upwards, right? So when the market is moving in an uptrend, the textbook way, it normally tends to see the market creating higher highs and higher lows. So with this specific trend that I draw here, the market pretty much started to push from down here. So that would make this point a low. So I'm going to go ahead and label that point as low. So L to represent low. All right. Let's leave it at that. So L to represent low point. Trend start right there. We push from this low and we push up to this point. Now we move from this point in the market, which was a low, and we're now at somewhere which is pretty much higher than that where we started. So that would have made this area in the market a high. So we're going to put H to represent that high. All right. So after we created this high, the market pretty much made a U-turn and we started to trend downwards, creating this point in the market. So this is also a low, right? If you look at it, it is also a low point in the trend. But the fact that this low is actually a little above where we started, it would have made this point in the market a higher low. So we're going to put HL to represent that. HL to represent higher low. All right. So we created that low and then we trend up. So right now, we're at this point in the trend. As you can see, this point compared to the previous point, this one is a bit higher. So that would have mean this point in the trend a higher high, right? So we're going to put HH to represent that. HH to represent a higher high. All right. So after creating that higher high point, I can see we made a retracement back to the downside. Also creating a low, which is higher than our previous low, right? So that would have made this point a higher low. But it doesn't make, by the time we're done, is amount of H, higher. low, higher, 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 you know, so it don't make no sense. So instead of putting so much, it just remain as a higher low. You get me? Yeah, man. So we just put HL, higher low. All right. Higher low. So push from this higher low up to this point, same thing. This is a high, it is higher than the previous high. It's a higher high. All right. So we put HH. As you can see, very, very simple stuff. So this is the textbook definition of what a uptrend actually looks like, right? We see the movement, the market push from low, we go to high, we pull back, creating higher low, we push to a higher high, pull back, higher low, higher high, right? So yeah, very, very simple stuff. So what I'm going to do next, I'm going to draw a next diagram. Still on the topic of uptrend, guys. Still on the topic of uptrend. So I'm going to draw next illustration right here. All right. So this diagram that I just draw, as you can see, we're still trending to the upside, right? Which if you're guessing that this is an uptrend, that's correct, right? It is still an uptrend, but it's a bit different from what we first introduced to as being an uptrend. As I said, this is a textbook way. But in the market, when you go in the live market, where you're seeing candlesticks and so forth, some of the time you will not see the market looking like it some of the time it will look way crazier, something looking like this. Now, you see, once you understand the principles behind what really define an uptrend, no matter how the market might look confusing, once you master the principle behind what define an uptrend, the market can never confuse you. And trust me, after going through these material, you're very much on your way to achieving that. Right? So as we look right here, the trend pretty much start here, right? So this would have been the low. So we can just go ahead and we label that point as low. So we'll put L to represent low point. All right. So we create that low. After we create that low, the market pushed to this point. So that would have made this point a high. So we're going to put H to represent a high. After creating this point, the market pretty much trend downwards. As you can see, this point, new point that the market create, it's a bit higher, right? It's a bit higher. It's a low. It's a bit higher than the first one. So that would have made this area a higher low. Higher low. So I'm going to put HL to represent that point. Higher low. So as you can see, after creating this higher low point, the market trend to the upside, creating this point. As you can see, this point did not break our previous high. So since it did not break above our previous high, right, it's lower. So that would have made this area in the market a lower high, right? So I'm going to put LH to represent lower high. Lower high. Well, kind of running out of space right there. So I'm going to just draw it lower high. All right. Hope you guys are following. So very simple stuff, you know? All right. So after creating that lower high point, we pretty much push down, created this point. As you guys can see, this point is slightly higher than this previous higher low. So that would have made this area a higher low, right? Higher low. So yeah, higher low. So we'll push from this higher low point and we're up here now, right? We're up here. So seeing the fact that this area in the market trend, it basically higher than these previous areas, it would have made this point in the trend a higher high because we take out the previous high and lower high. So we're now at a higher high point. So after creating that higher high point, we push down here, right? We push down. If I should draw for a rectangle and drop it right here, if I should draw for this rectangle and drop it right here, you would have noticed that this new low that the market created, it pretty much came back and it tapped into the previous low, right? So that is a double bottom rejection, right? So reject, push up, market pull back, reject, and we push up. So previously, we created a higher low point right here. Market came back and it tapped into the same area and we respect the area and push up. So this point would have been like an equal low because we basically reject the same low point. So we create that equal low to that area, right? After creating that equal low point, we push up, creating this point in the trend. As I can see, this point is actually a slightly lower point or area than the previous point, which was a higher high. So that would have made this area a lower high, right? Lower high. So LH to represent that, lower high. So after creating this lower high point, we basically push down, creating this area in the market trend. This area, we can now classify this as being a higher low because it's actually higher than the previous equal low point that it created, right? So higher low, market push up, lower high again, because what? This high is actually lower than this previous lower high. So it's a new lower high. Market push down, higher high, slightly higher, push up, break structure. So now we're at a higher high. Market pull back, retest, creating a higher low. Push up, higher high, higher low, right? Right? So trend continues. Higher high, higher low, higher high, higher low, lower high, higher low. As we can see, a slightly lower high, right? Or it's almost on the same level still. So it could even classify it as being a equal high, right? So we even see the equal highs in the trend. Market pullback, higher low, breakout, higher high, retest, push up. Now, as I see up here, this was a higher low point that the market created, right? And if we should draw rectangle zone right here, if we should draw rectangle zone right there and we scale in and we look, we would have seen that the market, what it did, it pushed up after creating this higher low point to push up, creating a higher high, we pull back, pushing below the previous higher low point that we create, right? But what? It didn't maintain below. So it just dipped below, creating would look like we create like a instead of a higher low, we create like a lower low in a sense, right? But instead we push up. So as you guys can see, this type of uptrend compared to the first one that we looked at, it's way different. But like I said, when you're in the market, you're going to see trend like this, but you must understand the principle behind an uptrend, and the market cannot confuse it, trust me, right? So when we look at this structure now, it's clear that the market, the directional flow is moving to the upside, but we're not seeing as fluent where we're seeing higher high, higher low, higher high. No, it's different here. We're seeing now where the market in the uptrend, we're seeing where we're getting lower highs in the uptrend, and we're getting equal lows in the uptrend. We're also getting equal highs in the uptrend, right? We're seeing where the market is even dipping below lows, but not maintaining, pushing up, back, maintaining the overall uptrend, right? So it's a bit different, but throughout all of this, what is the most consistent? If you said the lows, then you'll guess correct, because if we should look, we're seeing where the market is maintaining highs getting lower and lower, right? Throughout the trend, but the lows kept on getting higher. If they did not get higher, they pretty much maintain the same level, right? They form support at the same level, or you might just have a little fake out, right? But it is maintaining, right? It is maintaining. The lows are, gradually getting higher and higher. So that is all the information you need right there. In the uptrend, the lows are what define the uptrend. The lows, right? As long as the lows are continuously getting higher and higher, or they're maintaining, meaning that we're not getting the low breaking, creating lower low retesting and look like it want to break, we're maintaining structure. Is either we create a higher low point, or we come back to the zone and we reject the same area, creating like a double bottom. That is an uptrend. That is an uptrending market. So even if we see the market creating lower highs, multiple lower highs in the uptrend, are maintaining high, equal highs, double top rejection in the uptrend, we're still in a uptrend until a low point is broken, right? Why? In the uptrend, who is in control of the market? Buyers are in control, right? So and if you notice, the market pretty much push up from the lows, which means we have buying orders at the low points, right? So if we get the market to push below, if we get the market to break below one of these areas, then it's a sign that the buyers are getting weak, right? It's a sign that the buyers in the market are getting weak. They're getting exhausted, right? So until that happens, we're in a uptrend. Doesn't matter how the market look, right? So now we're going to look at a downtrend. So that was it for the uptrend. So we're going to look at the downtrend now. So the downtrend is pretty similar concept, right? We're just reversing stuff now. So first, I'm going to start with the more simple textbook definition of a downtrend. Then we look at a more complex way of the downtrend. So in the downtrend, we usually see movements like this. The movement in the downtrend usually resembles something like this. So as you guys can see, with this type of movement, the trend actually starts from the top, right? Which would have made this point, if we start from up here, this would have been the high. So we can label it as H to represent high. All right, so we move from this high point and we push down, creating this low, right? Low. So we're going to put L to represent low. All right. After creating this low point, guys, you can see that the market did a pullback, creating this point. Now, this is also a high in the trend. This is also a high. But the fact that this high is actually lower than the previous one, we're going to label it as a lower high. So we're going to put LH to represent that. Lower high. So we push from this lower high point and we push down to this low. But this low point, if we notice, it's actually lower than the previous low that we created. Now, seeing that this is the case, this would have been a lower low. So we're going to put LL to represent lower low. LL. All right. So you see the market, what happened now? We do a pullback to the upside, right? And we reject this area and we push down. And it's also a high. So it's actually lower than the previous high. So this would be our new lower high point. So we're going to put LH to represent that. LH lower high. So we push down from this lower high and we're here now in the trend. So this point is a lower low. You get me? Because it's actually lower than the previous low. It's pretty much pullback, lower high. So that's the textbook definition of a downtrend, guys. You normally look out for the market creating structure like this. Lower highs, lower lows, lower highs, lower lows, lower highs, lower low, right? So now we're going to move on to a more complex version of the downtrend. All right. So this illustration, it's looking way more complicated, but we're still on the topic of downtrend, which means this illustration that I draw is a representation of a downtrend, right? Now we're going to take our time and go through it. So the trend actually starts from up here. This is the highest point in the trend, which would have made this point or high. So we're going to put H to represent high. So the market pushed from that high point and we push down to this area. So seeing that this point is lower, this is going to be our low. All right? Pretty simple stuff, guys. Low. The market did what? It did a retracement, creating this lower high because what? It's a high, yes, but it's a bit lower than where we started. So it's going to be a lower high. All right. So after creating this lower high point, the market pretty much pushed down. All right. We push down, creating this lower low because it's obvious. This low point is actually lower than the previous low. So lower low. So we're going to put LL to represent that. Lower low. So after the market create this this lower low point to pull back, creating a new lower high. So right here, lower high. All right, we push down from that lower high point, creating a new lower low. The market pull back. Look what happened now. If we should draw a rectangle zone right along here, we notice that, look what happened. The market pushed down from this lower high, creating this lower low. All right? The market pulled back, rejecting the same high that we pushed from previously. So that would have made this point a equal high point, right? Equal high. So the market came back and rejected the same high and we pushed down, creating what? Seeing that this point is actually higher than the previous lower low point that we create, this would have been a higher low. Weird, right? We're seeing higher low in a downtrend. Our uptrend, if you see higher low in, all right? You see it in downtrend as well, all right? You can see higher low forming in the downtrend as well. So this here, higher low. Then what happened? The market pushed back, targeting the same zone. And what happened? We pushed down, right? So this is like a triple top rejection. Market push down from a zone. Market attempt to break past the zone again. We push down. And we attempt again, we push down. So it's a triple top rejection, right? Market rejecting the same area. So all of these areas, equal highs we have here, equal highs. So after the market created that third high rejection, we push down. Look what happened. This is a low, you know, but it's actually higher than the previous low. So we have a new higher low point. Market push up, creating what? This lower high. So we didn't target the same zone. Instead, we created a bit lower high. We push down, taking out all these previous higher low that we created, now creating a lower low. All right? Market pull back, creating lower high. Right there. We push down, creating lower low. Market pull back, lower high, lower low. Right? Equal highs, higher low, lower high, lower low, right? Equal high, push down, lower low, lower high, higher low, market push up. So what happened here, we pretty much break above this lower high right here. But as you can see, the market did not maintain. So we fall back, creating a equal low point, then lower high, and then what? The trend continues. All right? So as you guys can see, throughout all of this movement in the downtrend, the main thing that was most consistent throughout the trend are the highs. The highs are what defines the downtrend, right? Because, let's face it, sellers are the ones who are in control of the downtrend, right? If the market is getting lower because of sellers' domination, where the sellers must be? They must be at the highs because the market pushed down from the high points. So these are the areas where we find sellers pushing the market down, causing price or the overall trend to get lower and lower, right? So even though we're in the downtrend and we see the market creating higher low points, this does not make this trend now an uptrend, because we used to seeing higher low in the uptrend and we're seeing it now in the downtrend. Means that the downtrend is now a uptrend. No. Until we get a break of the highs, then we consider the market wanting to change trend. And you can see we can still get break above highs, but that does not mean that the market transition into an uptrend, because just like this, we can see the market break above a high, just like this, what it did down here. So we can see the market created a lower high right here, push down, creating a higher low, push up. We see a little break above the lower high, but what? We push back down and the trend continue to the downside, right? So until a high is broken and maintained, then we consider a change in market trend. But once that does not happen, we're in a downtrend, right? So we're in a downtrend. Doesn't matter how the lows want to form or what else want to happen. As long as the highs are maintaining and getting lower and lower, or we're rejecting the same level and maintaining to the downside, we're in a downtrend, right? Yeah, man. So guys, trust me, you see, once you have this type of understanding, no type of market movement cannot show you off. You get me? None, no matter how the market want to look, because what you have the principle of what defines an uptrend and what defines a downtrend, right? So we look at uptrend, right? And we look at downtrend. Now, let's take a look at a consolidating / sideways market. Now, a consolidating or sideways market, usually this type of trend, I don't really recommend to trade during this type time when the market is consolidating, right? Especially to my new traders. I do trade range, but not every range. But a sideways market, usually, as its name suggests, sideways. We don't have any movement to the upside nor to the downside. So usually what happens in a sideways market, it normally tends to look something like this. So we're basically pushing upwards, you're rejecting high, we're pushing back down to low, back up to high, rejecting, pushing down, boom, 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 boom. We're pretty much in a box, right? So the movement usually resembles something like this of a sideways market. All right, the market is rejecting high, pushing back down to support, rejecting resistance, back down to support, and we're not going anywhere. So there's no definite trend present. So usual case why we encounter a sideways market. So you can encounter a sideways market when the market, let's say, for instance, we were moving in a downtrend. A uptrend. Let's say we're moving in an uptrend. The market will go through what we call breaking play, or the market pretty much grind to a halt where we're not moving in a definite trend, right? During that time, let's say I was in a buy from down here and I wish to take profit for whatever reason up here. If we have a large volume of people taking profit at the same area, which means that we're getting out of our buy position, then it will cause slowing down of price. And usually this is a way how it is reflected by, we see the market starting to move sideways, right? And next reason why we encounter sideways market is to accumulate orders, right? The market would push, slow down, accumulate orders to continue in its original trend. Or usually when the market is about to change direction, we usually see the market slow down right? We start to see some sideways movement, and then the market eventually, let's say using this illustration, we were moving in an uptrend. Then we see the market start with its sideways movement. One of two outcomes of after this type of sideways movement is either we can change trend and start to go down, or like I said, we can continue and go up in our uptrend. All right. So that's the three main ways how the market move, guys, in our uptrend, downtrend, and sideways or consolidating market. Same thing we refer to as a ranging market. All right. So very simple stuff, guys. So in our next video on market structure, we're going to take a look at the chart and look at some of these examples. Catch you in the next video.